Yo, what's up, party people? It's your boy Trader Main back with another episode of the Order Book Show. It's August, guys. It is August. The year is flying by. We're now in the 8th month of 2026. That means you're running out of time. You're running out of time to get your fucking shit done. All those goals that you made at the start of 2026, guess what? If you're not, 3/4 of the way through them, it's butt clench time. It's time to get after it. So the days are just ripping by. Summer more than halfway over at this point. A little bit depressing, but at least we have some good news. The good news is that our boy Razmer won the Solana World Series of Poker event. Now, I would like to claim some credit for his win because he did buy my solid gold presidential Rolex not too long ago, which I believe he was wearing at the event, and he's been crushing and making money basically ever since he bought that watch. So basically, I also kind of won the World Series of Poker in a sense. The same way that like a golf coach, the Tiger Woods' golf coach wins the Masters when Tiger wins the Masters. That's basically what's going on here. So congrats to the boy Razmer. A more important question is, how the hell does your boy Main get invited to this? I get you want Ansem there, Razmer, sure, Banks, obviously, but like, who the hell are those other people? Crypto Wendo, I guess we know. I take that back. We know Wendy. We know Gabriel. Ming, I guess. But like, there's a couple people there where it's like, could you not put in the thick neck lord in there to play a little pokes? I don't know. You guys got to get more active for me on the timeline. Next tournament, I need to be there. I need to be there in person. It's not enough to win vicariously through Razmer. So the good news, guys, is that outside of Razmer win is that stocks are ripping. So something that we've been watching for weeks now has been waiting for stocks to break up from this downtrending kind of sideways choppy price action that they've been in. And we finally got that. It looks like Leopold had to get wiped out. And now the indices are ripping. Some of the memory stuff is bouncing, some of it not. So we got a lot to talk about on the TradFi side. Crypto, not a ton is going on. As you guys know, we were bullish on Bitcoin. I took a long initially that I ended up closing. I would have gotten stopped out anyways because we ended up trading a little lower. But we're back up testing that downtrend line. So is it finally time? Could we maybe have seen the low kind of this week? Or maybe we get one more stab down. But have we potentially seen the low on Bitcoin? And it's finally time for us to move up towards 70K and maybe, just maybe, participate in some of this upside because equities are blasting to new highs. S&P 500 is damn near at 8,000. And Bitcoin's like, almost 50% off all-time high. So lots to discuss. Let's get into it. As always, we got our boy Cody in the chat. So if you got some chart requests, some things that you want to see, you let me know in the chat. We have some leftovers from last stream. So you do not need to request Joby, DHR, IBRX, Aero, Nike, Link, WMC, or LYX. Okay, those are going to be covered. And of course, if you have any other questions about trading in general, life advice from an old 43-year-old married man who's done many things in his time on this earth, is many decades, 4+ decades, those are always welcome as well. What's up, everyone over on YouTube? Kick, what's up, everyone over on Twitter? Can I FOMO along now? I mean, we're getting close. So I don't really have much to update you guys on the high time frame. I posted yesterday about Bitcoin. I was like, listen, this is potentially a higher low, right? This is potentially higher low. And if we want to see a move up here, because I've been obviously wanting to kind of see price action above here, right? Or below here, I need to see something happen. We've basically been going sideways for a month, right? Like a little bit of a move up, but like this is a pretty low vol month. You could argue, I mean, even since this low got made back here, all the way back at the start of June. Like, that's our range. So we've been going sideways in a $10,000 range for 2 months. So all the people telling you that you're missing out on the bull market, you're never going to make it if you're not paying attention at this very moment, the bottom's in, you're crazy if you don't think the bottom's in. We have been trading in a $10,000 range for 2 months. You could have been out enjoying time with your friends and family, touching grass, doing a little Euro summer. You could have been doing a lot of things, come back, and pretty much all these charts are exactly where they were 2 months ago. And some of the stuff that maybe you might be interested in buying, like a hyperliquid, for example, is actually lower than it was 2 months ago. Right? Some of this stuff is slightly higher. Some of the stuff is at the same level. Some of the stuff is lower than it was 2 months ago. But effectively, June until now, 2 months of price action. We haven't really done that much. You haven't really missed anything at all. So just even more evidence that the vast majority of people on Twitter, their job is to foment FOMO within you. They want you to feel like you're missing out. They want you engaging and liking and reacting. They want you stressed. They want you buying their shit because that is how a lot of these people make money. A lot of these people make more money from Twitter, from KOL deals, from sponsorships, affiliate deals, than they do from trading. So their financial interest is in you being active, feeling like you're missing out, engaging with their shit. Don't let it fuck with you, okay? Don't let it fuck with you. You got lots and lots of time to scale into these moves here. So I think at best, right, like we're now testing this downtrend line here. Like, I think at best, we get some sort of move up. And I ultimately still think that that probably puts in a lower high. Now, whether or not we make a new low, or maybe it's just more sideways, I don't really know, right? It could be a new low. I have no idea. But I don't think you have to worry about missing the bottom. I'm pretty confident that you will get an opportunity to buy in this range and maybe lower well into September and October. So whether or not we go down here, I don't know, but I'm pretty sure you'll get more kicks at the can to buy within this range going in to September and October. That's my opinion, obviously, because I'm still following the 4-year cycle, because nothing at all has changed in terms of how prices reacted seasonality-wise or cycle-wise, or quite frankly, price-wise, as it comes to the 4-year cycle. Now, getting into kind of the more day trading look at things, I initially took a long here on this SFP, this one. Stop was down there. I closed it. We ended up coming down, tagging that out, and now we've moved away. So we've now put in like a nice kind of very clean H12 sweep here at the bottom. We've got a very nice daily sweep at this level here, and we're banging back up into here. We're banging back up into here. For now, this is still low, a high, a low, lower high, lower low, lower high, lower low. This could absolutely print a lower high and then come down here where I'd be interested in longs. But if we're able to break out of this downtrending structure, I think that's probably your next long opportunity towards 70 with a stop down here. Like, that's probably the trade that jumps out to me the most right now, if we're able to get a clean break. Now, if we break out of this downtrend line, but sweep this high, that's not a long I'm interested in taking. But if we get a nice strong close like this, I think you could probably market long or long the next pullback, and then you put your stop down here, and then I think you target the mid-range. So that's kind of the next trade that I'd be looking for potentially on the long side, if we're going to get one. But I want to see a clean break of this downtrending structure first. The reason I'm not interested in FOMO longing right here is because I try to never FOMO long. I try to make sure I'm taking along for a good reason. The reason I'm not FOMO longing is because this is still kind of, downtrending structure. And we've got like these lows here that are just like asking to get whipped. So I wouldn't be surprised at all if this is what we see on any sort of pullback in equities, if we get one. So I'm just going to chill. And I know it's boring being like, oh my God, every episode we come in and you just say that you're chilling. But for me, I'm trying to take high probability trades only, and I just don't have any right now, at least on Bitcoin, right? So I'm going to just wait. I'm going to relax. I'm not in a rush on this thing. If we get a nice breakout of this downtrending structure, then I think we trade up into here. If we fail to break out of this downtrending structure, I think we trade down into here. I could see a trade opportunity here. I could see the trade opportunity here, and I could maybe see some sort of short opportunity up here. But since we are not at either of these three locations, any of these three locations, there's no trade for me right now. I'm just simply going to wait. And I know that that's frustrating. I know that that's boring, but this is how I trade. Sorry. So we'll have to see. We'll have to see. I'm not going to force anything on Bitcoin here. I don't think there's any reason to. Again, same range for 2 months here. How many people have told you the bottoms in on Bitcoin were less than 10% off the lows, like just over 10% off the lows? Not worried. The bottoms in, it's going to be very obvious. It's going to be very obvious. We're going to get high time frame market structure shifts. We don't have any of those yet. Okay, we don't have any of those yet. Let's get a close above 67,000 or 70,000. Then we can start talking about, even the upper part of the range, let alone the bottom being in. Can I pull these over there? So range bound for now. Let's see what happens here, right? It's Tuesday, early in the week. Equities just fucking gassing it, right? Gassing it. This is kind of the setup you're looking for on Bitcoin, right? See how we have this downtrending structure? You want to see this. Like, this is arguably probably like a long now. Just to new highs. Entry there kind of sucks, but maybe you get some sort of pullback. Same thing with the S&P. Remember, I had this drawn on forever. Break above the highs is your long. Stop below the low. Well, that trade is now technically active. I mean, in theory, I should have put that trade on yesterday. I didn't. As soon as we got that close above the highs here, that was the entry. But at this point, if we get any sort of retest of these highs here, I think you long it and you just put your stop down here. Same idea. Yeah, I mean, this was giga. Same thing with the Russell here, right? Same as Bitcoin. Same trade idea. This was the long right here on that close. So equity's looking really, really good. Can Bitcoin catch some of this bid? Like, can we catch any of this fucking bid in crypto? You really hope so. But so far, it's not been the case. I've talked about this for a while now, since October 10th. There's just been this dislocation between Bitcoin and kind of the broader market, and that just seems to be continuing. Like, it would be hilarious if Bitcoin did this and made new lows while the S&P has its like kind of final blow off leg, and then it gets its correction in line with Bitcoin getting its major downside correction. Like, I tweeted, I think this yesterday, how funny would it be if Bitcoin makes another low while equities just rip? But it would not surprise me in the slightest. But equities look really good. To me, this all looks like it's on like Donkey Kong for another leg to the highs. or for another kind of lockout expansive leg through the highs. Like every time we get the break, just big move up. Every time we get the break, big move up. And it's pretty consistent lockout kind of vibes. This is getting retarded looking. It's just getting silly steep. The AI underlying trade kind of imploded a little bit. Obviously, we're seeing a bounce back on some of this stuff. But even though this thing's up 45% from the low, right? It's still down 40% off the high. Same with like Micron, right? 20% off the low. Still almost 30% off the high. So I think the entertaining stuff, and we'll get into this when we get into some of the posts on Twitter, has definitely not been crypto lately. I think a lot of people are trying to hype you up that like you're missing out on crypto. It's like really what you're missing out on is TradFi. You're not missing anything in crypto. But I do have kind of a thesis that I agree with actually Chris Bernisk, Tia legend, on, which is, how good was Halo back in the day, boys? I think it's here. Where are you, Chris? Where are you, bro? Yeah, well, I'm not an equity specialist. I do think the spell has been broken. I'm viewing these violent rebounds as dead cats with the expectation that crypto will catch shrapnel early, but also bottom earlier than equities too. I kind of agree with that take in that indices might rip here, or they are ripping, right? Have another leg, but some of these memory names, AI names, are kind of busted now. And these bounces are going to be dead cat bounces. Like this thing could put in a big rip and then still make new lows, or at least just go sideways into the end of the year. And then when we eventually get this equities rollover, Bitcoin rolls over more aggressively, but bottoms earlier. So yeah, I think you're not missing much in crypto, guys. Don't let anyone tell you that you're missing the fucking bull run. It hasn't started yet. It hasn't started yet. By no metrics has it started yet. We're just in a little bit of a bounce off the bottom. No different than people who were telling you the bottom was in here as we rallied 40% off the lows, right? Only to make new lows. I would not be surprised at all if we have, some 20 to 30% rally that either comes back here or makes new lows. Either way, I think it's time to pay attention. We're getting closer to those bottoming dates, which could be 6, 8, 12 weeks away, right? Like September's 4 weeks away, not even. October is 8 weeks away. I've been talking about September, October, November 2026 for 6, 7 months now. Well, we're now less than 2 to 3 months away from that, even 1 month in some instances. So I do think from a time frame perspective, we're getting close, but I don't think we're there yet. And again, price-wise, literally nothing's happened. My dog boy DeFi says, Maine, I got one for you. On your podcast with Elliot, you guys talk about the elite checklist. What is your list of things that you're doing, your elite checklist? So I really appreciate the positive comments, first of all, that I got on that podcast interview we did with Elliot. He's awesome. For me, it's very different than maybe what it might be for you, right? So for me, the biggest thing was I was building this business, right? Like I was building Breakout. I don't think I've been considering for a while doing some sort of, I don't know, some sort of like video talking about the whole building of Breakout experience. Because I don't know what you guys know about entrepreneurship or business or whatever. But like arguably, I created a unicorn. And what I mean by that is when you do venture capital investing and you invest in businesses and startups, 99% of them, 9 out of 10 of the things you invest in are zeros. Like they're zeros. So really what you're trying to do is you pick 10, 20 investments and 18 of them go to zero, but the 2 that don't are the ones that pay for the losses and more, right? So it's very rare that your first business is an unbelievable success, but ours happened to be. We launched Breakout when Bitcoin was at like 20 to 25K. Kraken bought the entire thing when Bitcoin was at like 110. We grew this business very quickly, very big. It's a big business at this point. I mean, we've paid out over 50 million, 50, to traders in like 3 years. It's a lot of money. And from the time we launched to the time we exited, it was less than 2 years. So it's a very rare outcome that you get. Like the raise that we did, all the people who invested had a nice return on their capital in a very short amount of time. And what I was struggling with specifically with Elliot is I'm trying to manage having a social media brand that is about trading, where I share trade ideas, I do live streams, I post trades, and run a company that benefits from my social media brand. But also realize that I needed to put more time and effort into the business. So for me, part of my checklist was just having things I could do every day to feel like I accomplished a good day. Because when you're trading, you kind of live and die by your P&L. Like, even though that's not necessarily what you should be doing, it's not a good thing, you live and die by the P&L, right? Like, you have a good month, it's going to reflect in your P&L. You have a bad month, it's going to reflect in your P&L. Whereas when you're building a company, you don't have that instant feedback, right? Like, the company can do well, but it doesn't mean that I made more money, right? Or it doesn't necessarily show up in the performance right away. It's much more of a delayed thing. And then ultimately, I realized a lot of that value when we sold for Kraken. Sold Kraken. So my checklist was making sure that I got all of the things I needed to do for Breakout in that day done. So I'm on Slack. Any message that relates to me, I had to respond to. I had to get all the marketing material done. That was demanded of me. If you go look on any of the Breakout social media, 95% of the videos you see are me. I'm still the face of the company. I had to do all my videos for my brand, right? Making sure I'm streaming, posting educational videos, answering questions from Telegram, from Discord. I had to go to the gym. I had to make sure I was spending enough time with my wife. And if there were trades to be taken, I was following my process. But it was trying to separate my idea of mental well-being from the number on the screen. Because when I was building Breakout, we were in the bull market. Like, I launched Breakout literally here. So I didn't, and I sold Breakout literally here. Okay. I much would have, obviously I'm a trader. I want to be trading every day during this period of time. This is the most important time to be locked into the charts, is when we're in this aggressive uptrend. I couldn't do that. I didn't have the bandwidth. So it was about trying to separate myself from being like, I'm not going to catch every trade. I felt immense amounts of FOMO, seeing all my friends making all this money in the bull run. I still participated. I still took trades, but not nearly to the level that I had in the prior bull run, where I was trading full time. I was not trading full time in this last bull run, but it worked out because of Breakout. I unfortunately cannot give you the number because I signed a part of the agreement with Kraken is they did not want to disclose the amount of the purchase. But it was a very happy outcome. And if you Google it, you can maybe estimate it. Thanks, CryptoPhase. What up, my G? So yeah, hopefully that answers your question, dog boy. But yeah, nothing really here to update on Bitcoin. Let's see if this fucking breaks out already. Like, everything that needs to happen for Bitcoin to go up, like, is happening. So we have equities ripping, the S&P's all-time high, NASDAQ ripping, the Dow Jones ripping, the Russell is ripping, putting in new highs. If there's ever been a time for this stuff to go, it's right now. Sorry, 1 second. Sorry, guys. If you live in Canada and you try and wire money out of your bank, it's like you're getting audited. It's like you're getting audited for, it's your money. You're trying to send it somewhere that you want to send it. And it's like 5 phone calls, get naked, bend over and cough before we let you send your money anywhere. Anyways, yeah, so everything that we want to see for Bitcoin to break out, it's here, right? It's here. So let's see if it can actually break out. ETH, not much to say here, right? Like, kind of similar to Bitcoin. We swept out the lows. We've got this like downtrend line here. Like, again, so much of this stuff is, where is our green dildo? You know what I mean? It's like everybody's getting a green dildo in the mail except for us. And it's been like that for a year almost. Everybody gets their big green dildo. When do we get our big green dildo? You know? When do we get ours? So ETH, same thing, same kind of setup I'm looking for. Like, I want to see a move up. I want to see some form of bullishness. Anything. Please. Please. Solana, what can I say? Like, all these, again, I'm just like so sick of everyone being like, oh my God, the bottom. Like, nothing's really happening. Solana is off of the freaking low from February. We're not even up 10% from where we were in February. February, March, April, May, June, July, August. That's 7 months ago. Okay? 7 months ago. Now, the good news is that means potentially, you know, these are bottoming ranges that we're forming, and it's absolutely close, but like still no high time frame structure shifts, nothing. Let's see some bullishness. Let's see some bullishness. So Solana itself, this is weekly demand here. We broke this little high. Go down to the 12-hour chart. We took out this low. We're back above it. I want to see a break. Any of these 3 charts, let's just see a break of the trend line, and then maybe we can get, you know, some activity. But for the time being, just not there yet. You know, ETH is, I think, up the most off the bottom out of the 3. And that's apparent when you look at ETH BTC, obviously, right? ETH BTC is broken out of its downtrend line, which is kind of what I'm waiting for any of these other coins to do. It's broken out of its downtrend line here. Okay, let's see if we get some movement. See if we get some fucking movement. All right. CryptoFace, you trying to come on? You trying to come on for a little stream here, broski? Let me know if you're down, bro. Let me know if you're down. That's all I really got. Like, dollar, we're going to talk about this in a bit, but like the dollar's at a very key inflection point because essentially the US and Japan are trying to prevent the interest rates rising via like kind of an unwind of the yen carry trade and just and yen and the yen strength. We're going to get into this in one of the news items here. But yeah, dollar, let's see. Holding this level here. Is it going to get another leg up? If it does, could potentially be bearish for crypto. All right, everyone freaking out about bonds. Yields, we're at big highs here. Nothing's happened yet, though. Some of this tech stuff, right, just kind of finally bouncing. I mean, it's got to be painful to be Leopold, you know, getting licked and seeing everything that you were holding. I think his big 3 holdings were Sandisk, Micron, and Bloom Energy, and they're all up like 20 to 40% immediately after he closed, which is just pain, but that's how it goes, man. Remember Nvidia? No market structure break, no short. So still no market structure break here on Nvidia. Pushing back into the highs. coupled with equity strength, this is why I had the alert on here. There's no short until we broke below this low. So if you shorted this thing here, being like, okay, it's over, we're back, it's going to nuke, we needed to see a break below that low. It still hasn't happened yet. Micron, I mean, a lot of this stuff bouncing from kind of where we mentioned it would, right? So I posted that chart saying, you know, a lot of this stuff is due for a bounce. Where is it bouncing from? Lower part of the weekly range. This is your weekly bullish dealing range. Here's your demand. This is your weekly bullish dealing range. Here's your demand. So a lot of this stuff still has a lot of work to do. Where's SK Hynix? SK Hynix weaker than everything else. But yeah, I don't really have much else, guys. SpaceX getting a little bit of a pump. We talked about the break of this trend line, right? A little move up, retest, push up, but now it's got earnings, right? It's down. Big spike up, back down. They announced like a partnership with Nvidia, so just more incestuous shit going on there. Amazon pushing for another high. Let's see if this is the weakest of the highs, right? Remember how each of these have been getting weaker? Let's see what happens here. Less time and space between each of them. So that's something to watch here. Meta, sweep at the lows. Nice little push up. Tesla had its breakdown. I'm pretty bearish Tesla on any sort of rally. It's probably a short. Hood into resistance. So we'll get into chart requests here now because there's a bunch of them. So I'm going to try and get into as many as I can because I got like 10 or 11 here. Main, sometimes I don't understand what I'm looking at and doing. I don't know if you or anyone in the chat has ever had a moment to think, am I even doing this right? I've watched all the videos in the whiteboard series. Have you had a feeling of seeing things but not being able to do them live? Yes. I think one of the biggest, one of the most common issues that new traders have is paralysis by analysis, right? So you're learning, you're watching, you're reading books, you're watching YouTube videos. But what you're not doing, in my opinion, is the most important thing, which is actually getting in the charts live and marking them out, okay? Marking them out. So trading is like a sport. It is a skill that is learned by doing. You can watch a million videos on how to hit a golf ball. You're not going to know how to hit a golf ball until you go to the driving range and you start hitting golf balls, right? Because doing it on YouTube and watching is very different than going to the driving range and actually holding the golf club, seeing how your body moves. And trading is no different, right? Watching me show you how to mark up charts is one thing. You getting in your own charts and actually marking the levels out. Getting good at identifying key levels, highs and lows, right? Start at the basics. Try and mark out market structure. And then wait and see if what you're doing actually is right. You can do this back testing as well. You can use a site like MyFX Replay. You can use the replay tool on TradingView. Mark out your market structure levels and your order blocks and your dealing ranges, and then play price out in time and see if the levels you're marking are actually important and things that you're looking for actually occur where they should occur. It's a learn by doing sport. So you have to get in the charts, actually start applying this stuff to see if it's going to work for you or in general, right? Watching the videos is not enough. Someone commented on my most recent video. They're like, hey, if I watch all the videos in this series, am I going to be successful? I can show you what to do, but it's up to you to actually do it, get the repetitions in, take the trades, mark up the charts, make the mistakes, learn the emotional part of it, the trading psychology parts of it. That stuff cannot be learned on YouTube. Okay? It can't be learned on YouTube. It's only learned by doing. But yeah, that's part of the learning process, is feeling like you have no idea what the fuck's going on. So you're not alone, my friend. Shout out CryptoFace. We're gonna do a little joint stream. I'll have Cody reach out on my Twitter to organize it. I think stocks are being pumped on thin air. What do you think will happen when the S&P actually crashes? I think that will lead to the ultimate low on Bitcoin when this thing actually crashes, because I do think we're due for some sort of larger correction here. It's just, it seems like one leg higher first, right? One more kind of lockout rally. Where's a good fractal? I don't know. Like maybe it's this. I don't know. But one more little lockout rally before it's over. But I do think that we're going to get some sort of larger correction broadly across equities. And then I do think there's a world where the recovery of the correction takes a few years. Which is where I think Bitcoin can actually do very well, is equities have another leg up, then correct. Bitcoin bottoms sooner and rallies out of the bottom sooner, just like 2008, 9 when Bitcoin was invented. I think there could be a period of time where Bitcoin is, a pretty nice asset. I hope. Otherwise, what the fuck have we been wasting our time with? We could have just been equity traders over the last few years, probably done a lot better. I see someone asking a question about order blocks over and over and over again here. What's your name here? Huge ICT question. No one answers me. OBs, you don't clear this up. Is it a rule that they have to start with an opposite colored candle? I'm learning it does not, but it's common generalization. So there's really two ways to think about it, right? Because you got to remember, ICT is completely made up bullshit, right? It's not real. It's not real. ICT has taken concepts that already exist and he's repainted them with his own verbs and adjectives and pronouns and names and things. Okay, supply and demand, Wyckoff accumulation and distribution, order flow, all of these things already existed. Okay, but ICT has coined his own terms to describe things that already existed. All right. That's why a lot of people hate him. But at the end of the day, he's an incredible marketer, and I learned a lot from him. The way that order blocks are described by ICT is in a bullish order block, it is the down candles, so these three, before a move up that breaks structure. Okay, that is your bullish order block. So if you're looking at the S&P here, this would be your order block, or just this candle right here would be your bullish order block, but you can combine these. Now, your question is, could it start with this candle? I don't see why not. The idea of teaching it as it's just these fucking candles is because it's an easy mechanical way to explain it. It's the down candles before the up move. But if you're thinking about it in theory, really what an order block is just demand. And it's this idea that it is the down move before the move up. So the down move, you could argue, started with this swing high. So I don't see any issue with including this in your order block. It doesn't really make a difference. So I don't think that what you're asking is that big of a question, because it doesn't really make a difference. But the idea is it's the down move before the move up. And if you were to put up an order flow chart, generally what you'll see is there is actual demand that gets formed here. And when the price comes down and retests that demand holds price. It's no different than an SFP. I see an SFP and I'm like, okay, that's longs getting trapped, shorts getting blown out. If you actually go and look underneath the hood of what's going on here, exactly how I describe an SFP is what's actually happening under the hood. People are breakout longing. They're getting met by massive sell pressure that puts us back under the level. And then price sells off. So hopefully that answers your question. It's a lot of people overthink, in my opinion, the most basic shit. And it prevents them from just like figuring it out. Go and mark your order block with this candle included. I don't think you're going to have very different results than someone who only takes these candles. They're going to be pretty damn similar. Joby. Okay, let's look at some of these chart requests here. What's up, Noah the Pimpster? Joby Aviation. I actually think this is a pretty interesting area, right? So here's your order block, your demand, right? We have a clear structure shift here on the monthly. And we took out the prior 2 months lows. So that's the low of this is the 3-month chart. Sorry, this is quarterly. So we took out 2 quarterly lows, and we're potentially going to be putting in a quarterly SFP here if we're able to close above there. So I think this is a pretty big area on this chart here. And I think drilling down to like the lower time frames here. Yeah, nice little weekly sweep there. I think if it can hold this low, hold above 780 here, I think this looks pretty nice. Why does everyone think the memory trade is a bubble when they can't even meet consumer demand? It's not that it's necessarily a bubble. Like Micron smashed earnings 20%, beat revenue by 15%, and then sold off 40%. The stock market still is going to go up or down. Moves like this are not sustainable. Point blank, period. It doesn't matter how good the demand is or the underlying company is. The stock market is still going to go up or down. When you get these parabolic bubble-like moves, they generally have a massive unwind, even if the company's still making money. I think the biggest question around the AI trade now and memory trade is not so much the revenues and demand. It's the spending has been huge. And the tech, is it going to get more efficient? Is the spending going to scale with revenues? Because so far they're spending more and revenues aren't necessarily equal to the new spend. There's just a lot of unknowns. And I think the expectations are so high based on performance so far. You got to keep in mind the people that are trading these memory plays in hedge funds and stuff, these are the smartest people on the planet doing this research. It's not some random retard on Twitter who's like, well, look at the PE ratio. Look at the revenue. Look at the demand. They're like studying the manufacturing, right? They're studying what's going on in China. They're taking this to a way deeper level than any of us can or will. So you kind of just got to let the market do what it's going to do. But the market's going to go up or down, right? Regardless. We just saw that. All these companies are still making money, yet the prices went down 30, 40, 50% in a month. I don't know how so many ICT students deny the underlying premise of his concepts. He couldn't do what he does without the algorithm being real. I hate to break it to you, bro, but the algorithm is complete bullshit. What he's describing is just the underlying mechanics of the market and how the market moves. This idea that ICT knows this algorithm, that the government is going to come and get him if he releases too much information, is a marketing stunt. Don't drink the Kool-Aid. Coming from a former Kool-Aid drinker, the concepts work because trading in general and the concepts that he used are based on the underlying principles of supply and demand, which is how the market moves. Are there algorithms within the market that are doing things at certain times of day, driving periods of high volatility, etc.? Yes, but this idea that there's this fucking tree of life that only ICT knows about is very silly. And it keeps people coming back. There's an infinite amount of sheep who will come back. And trust me, ICT has publicly called me out for supporting him. I love ICT. I learned a ton about trading from ICT, but I also live in reality. If ICT knew as much as he lets on that he seems to know, why is he not worth billions and billions of dollars running some crazy hedge fund? Why is he teaching fucking retards on YouTube the same thing over and over and over again. You can go back 10 plus years. The mentorship back then, I've watched all of it, dude. I was a charter member. I bought all of his shit that you could buy. I watched all of the old videos. I downloaded them to my hard drive. He just repackages shit with new names and re-releases it as if they're new concepts. It's all the same. It's all the same. Nothing new under the sun, my friend. Okay, DHR. Oops. Danaher. Danaher. What the fuck does this company do? Damn, bro. Like bull flag, maybe? You know what I mean? That's kind of what I would be watching on something like this, right? Is this a bull flag? If it is, it should hold this. Like this demand should hold. And your invalidation is here. So if you're bull on this thing, like that's kind of your setup right now. We gotta like, Cody, we gotta like start keeping a list of charts that we go over. And then like in the next video, we can like go and look and see if we've actually like done what I think we might do. This looks like an altcoin. Immunity Bio. Yeah, like this looks like an altcoin. I don't really have an opinion on this thing. I don't know what it does, who it is, what it do. But we came into kind of our origin of demand there. Got a decent little push up, but we swept the high. Like I much would have rather if that was a breakout. So I think on the monthly chart, you got a fair value gap here below that you kind of want to watch. On the weekly chart, I think this is kind of where you want to see us maybe hold this. So I think this is probably building in some demand here. It looks okay. But keep in mind, this can come in and fill this monthly fair value gap very easily. But for now, it looks like it's trying to build in some demand here. Only thing I don't like is just kind of this sweep. But other than that, I think like this is a legit, like I like this. I like this, which makes me think that this move is legit off the lows. And, you know, the correction here is one where you want to be looking for buying opportunities. So the area that you first look for buying opportunities is here. This area fails, you look for reasons to buy in here. You know what I mean? How's the golf game? I know your golf hat game is strong, lol. Golf game's pretty good right now, man. I got fit. So this season, I finally made the plunge and got new clubs. I was using kind of like my father-in-law's old clubs for the last couple of years, getting more seriously into golf. This year, I'm like, fuck it. I'm going to get a whole custom fitting done. So I got fitted for new clubs, and the game's been pretty good. I shot an 84 last week, which I'm pretty happy with. That's my second lowest score ever. My lowest score ever was an 82. I'm usually high 80s, low 90s now pretty consistently. Occasional blow up, but I'd say I'm probably like a 15 handicap, 15 to 16 handicap. Definitely improving, and I'm loving it. I love golf so much. I can't wait to just golf forever. It's all I want to do. If I could find a way to get paid to golf, I would do it. I would do it in a heartbeat. But like without having to be good, obviously. Like, yeah, you can be a pro golfer. No. You could be a YouTube golfer. Those guys are generally pretty good at golf. But man, if I could find a way to be a shitty paid YouTube golfer, that would be fun. Grupo Aero Mexico. I can probably get you a merch discount, dude. We have so much merch. I'm not gonna lie. I thought more people would want to buy the breakout merch because it's sick. Like the quality of the stuff, like is insane. Like it says breakout all in there. It's got the logo on the side, on the back, on the little tag here. Like the quality is insane of the hats, the hoodies, the joggers. But like no one really bought any merch. So I have like so much fucking merch. Aero Mexico here. Is this like Mexican Airlines, I assume? Pretty interesting spot. All right. Low, high, higher low, higher high, potential higher low here. So if we can break out of this, right? Because what we're coming into right here is this. So what you want to see is a fresh high above here, and then this thing can really go. But that's kind of what we're watching here. This is demand. Feel like unless you've got a really, really big audience, merch is just hard to move. It's hard to sell. Okay, I gotta speed up through some of these charts because we're already an hour deep, boys. Nike from last time, just nothing's happened. Yeah, shop.breakoutprop.com. I'd be curious to see how much we've sold. Like I wear the stuff all the time. I rock the fucking breakout shit constantly. Still just in this kind of range on Nike. Like I don't really have anything to update here. They smashed earnings. This can't be right. They beat earnings by 480%. Let's go. Yeah, we're trying to make it so you can buy merch directly with your payouts. I think that would probably help. I'm not taking any more requests, guys, but there's still a bunch of stuff on the list here. I'm sure we're going to get to your stuff. So Nike, I got nothing for you, bud. Nothing's happening on Nike here. I thought maybe it would come a little lower, kind of front run that level just a little bit. Still well below here. There's just nothing to talk about on Nike right now. Like, is this bottoming? Maybe, but like, let's see it get out of this range. Break out of this range, then I think things look good. Otherwise, down here. Till then, do nothing. Link. To me, the only thing the Link has going for it is that it's all the way back here. Right? I don't really give a shit about Link. But last time we had a consolidation at this zone, you know, it rallied 400-500%. We're back at that area. So this is a smart place to look for potential signs of support. Simple as that. Right? And this is every altcoin chart, guys. You guys always ask me every video. You ask me to pull up some old ass altcoin. A lot of these coins are back at key areas that led to prior rallies. So it absolutely makes sense for you to start looking for reasons to be bullish. Right? So if you go down to the 3-day chart here, you could argue, okay, maybe, just maybe, we're starting to get a little bit of bullish structure here. Let's see if that continues with a higher high. There's still been no high time frame structure break, right? Like the weekly level on Link is over almost at $11. So any sort of bounce here very well could just be a bearish retest, right? 12-hour chart, even the 12-hour market structure levels at like $9. The 4-hour chart, yeah, like it's pretty brutal. Because like that's not a new low. Yeah, I mean, this is demand. You want to see it hold here. WMC. Wayfinders. The fuck is this? I don't know which company you're asking me to look at here. Highly doubt it's this one. It must be this. Is this the right ticker? I don't know. Wasatch Small Cap Value Fund. No idea what this is. Miscellaneous investment trust. Obviously, I know it's that, but like, what the fuck is in it? Can't even go on the lower time frames. Seems to be doing okay. Yeah, I mean, I don't really have an opinion on this. I don't know enough about it. This is an area that I'd be watching. So if it comes up to here and puts in signs of rejections, top's probably in. I'd be interested in longs at new highs. Is Bitcoin finally going to break out here? It wants to, man. It wants to. Just give us the green dildo one time. All right, Hyperliquid. You guys know the deal. I've been hoping to long this lower. It's just kind of in this downtrend here. Tempting to break out a little bit, right? Still within this range. Not really much to say, guys. If we're able to get up here, then great. You know what I mean? But for now, like, we're in this range. You could argue this is your range if you want. Make this your range low. Get above the mid-range. Go to the range high. But for now, I still would love to buy this lower. And I'm going to need Bitcoin to roll over to do that. So I don't know if I'm going to get that. I don't know if I'll get that. But if it can break out, then probably goes to new highs. But nothing going on here. I like hype. I own some hype. I want to buy more hype. But this is kind of just a no man's land area for me here. Like, could this be a low? Could it be a temporary low? Sure. But I'm not fully convinced that the bottom's in yet. We'll see. Zcash. I mean, there you go. So I'd mapped this out however long ago. I don't remember. Bullish order block. Break in structure, pull back. This is where you want to look for longs. And we kind of got that, right? Pull back, starting to perk up here. Lower time frame here. If it's able to flip this, I think probably goes to the high. But we'll see. Lucid Prop just gave me my first payout. The best prop firm. How can you come to the fucking chat and stream of the CEO and founder of Breakout Prop and try and tell me that Lucid Prop is better? Nobody thinks Lucid Prop is better than Breakout. I promise you. I promise you. Lucid's got a 4.5 on Trustpilot. We got a 4.7. Get some. Get some. We also don't have any weird consistency rules, any of that other bullshit. I'm just joking. I've heard some good things about Lucid. But they're not really competition to us. They're a different business. CVX. I assume you mean the crypto. I mean, boy, oh boy. I can't remember which prop firm just had drama recently. Was it Lucid or was it Apex? It might have been Apex. Gold is probably coming to breakout. I just don't know when. We just added NASDAQ and the S&P 500. Hello? Yeah, this thing's holding up okay. It's holding up okay. If it can break out of this little consolidation here, I think it looks pretty interesting. Alpha Capital, that was the one. Yeah, like it's in this range here. But if it can break out, I think it starts to look pretty interesting. Right, very clear low. If it gets a nice breakout here, I think you look to buy like this. You know what I mean? Breakout, retest, bang. Yeah, a little bit of AMD if you go on like the lower time frames, like here. Sort of AMD. But I would want to see a, like, because I'm not long, right? Anytime, we've talked about this a bunch, right? You guys remember the 5 stages of main, right? Once the thing starts going sideways, you have 2 options. You either wait to buy the breakout, which is what I'm showing you here, or you just assume that this is the bottoming range and you look to accumulate in the discount. So since I'm not long in the discount, I would want to see a breakout and a retest before I'm interested in it. You think this is the manipulation? I see what you're saying. I could see that, right? This is your A, M, D, right? I could see that. Like, give us a solid little breakout here. Fresh high, right? Break above these highs here on the 3-day. That order block right there becomes your buy zone. Sandisk, I don't really have much to say. I'm just like, I'm not really interested in these names right now, other than the fact that this thing like perfectly hit our, trend line. We drew like the secondary trend line, right? We had the aggressive trend. And I said, if it fails the aggressive trend, it's going to the secondary one. It kind of pinged that perfectly. Otherwise, like, I don't have an opinion on this chart right now. I need to see the dust settle. Like, is this just a dead cat bounce? Weekly structure arguably is broken. 3-day structure is definitely broken. Daily structure is definitely broken. So this is just a downtrend right now. So let's see if it can flip this downtrend. Then it starts to get interesting again, back towards the highs. But I would not be surprised if a lot of this AI and memory stuff just like kind of chops and goes sideways for the rest of the year, cooling off after this kind of crazy move. AAIO, Applied Opto Electronics. Kind of shit are you guys trading? I love it. Sorry, excuse me. What's up, Love Stonks? How you doing, bro? Yeah, so I mean, for example, this is kind of similar to what I'm showing on Sandisk, right? We're in aggressive downtrend here. Okay, now we've got a structure shift, right? So we're making lower highs and lower lows. What happens when we all of a sudden make a higher high? Right? It's a market structure shift. This is like episode 3 of the whiteboard series. So that's interesting to me. So once we get that market structure shift, which was generated, right, at a key area here, it becomes interesting. So now that we have this potential change in trend here, the risk that you take is that any sort of pullback here is now actually going to be the beginning of an uptrend. So I think this is an interesting one to watch. You want to see it make a higher low next and then another higher high. And then you have a trend change, and then I think you can argue that this is going to go all the way back to the highs. Mecha Grills, what's up, my guy? Love to see you crushing the DJ world, bro. I got to come visit soon. We got to hang out. I haven't been in the city for a while. In the city, you should have a Yukon. Use that sample in one of your songs there, big dog. Came in a Yukon. In the city. Sounds just like Justin Bieber. It's fucking banger. But yeah, this is interesting. So like Sandisk, for example, that's what you want to see. I want to see a market structure shift. Right now, this is a bearish trend on the daily. Whereas here, we had a bearish trend on the daily that's now had a market structure shift. Cerebus Systems. You guys know, dude, with Mecha Grills, he'd take that sample, he'd fucking pitch it down, add a little auto-tune. That's a fucking banger. That's a banger, dude. Just do the fucking DJ magic. Kind of low-key hate this chart. Like, this is a huge fucking range that we're in here for, you know, a month. I think if we can get a breakout of this range, then this looks like accumulation. Right? Like, this looks like it could be accumulation. I would have much rather seen it run the low first to give me kind of more accumulation vibes. But if we break out of this consolidation, you could argue that this has been accumulation and this thing's going to rally. And this is like the base. ASTS. Yeah, I don't know. We drew this market structure break, sweep. So I don't remember when we drew this, but this is a high time frame sweep, monthly sweep. We now have a weekly market structure break. This is a breaker. You also have this weekly bearish order block there. So I would actually be looking for this to put in some sort of lower high. The only thing that I don't like about this is that the resistance is so close to the low, right? So we're not going to be trading anywhere near the premium. The premium is way up here, you know, above 95. So it's not an A++ setup, but I think you could look for reasons to find a lower high in here somewhere. Technically, the lower high could obviously occur up here, and it would be much more optimal. But your order block and your breaker block are in the discount. So not as much of a high probability shorting area. But if we get some sort of bearish price action in either of these areas, I think that would make sense based on the monthly sweep, weekly structure break, for then another leg lower. But just because I hate the, I don't love shorting in the discount. It's kind of the antithesis of the system here. So maybe we get a squeeze up into here, right? But then it looks maybe like that's a deviation, but that's what I'd be watching right now. I'd be watching these kind of areas on the weekly. See if we get any weakness here. OKLO. Yeah, I mean, I hate this fucking wick. It makes this thing so ugly. Even without the wick, like we're in this kind of demand zone here. I like setups like this. So you have this big move down, and then you have a key monthly low here. Like this is a quarterly low, you could argue, right? There's your quarterly low. So if we're able to get above this, I think it becomes pretty easy to justify a long, right? Sweep down there. Like you could argue this is already a long based on the structure down here. But if we're able to get above this, I don't see why not. Our merch will ship to Australia. I just have no idea what it'll cost. Australia is kind of in the middle of nowhere. Oh my God, the vice president of Kick is in the Kick chat. What up, dude? But yeah, above 45, I think this looks very interesting, right? Reclaim that old low for maybe a move up into here. Even if this is a downtrend, which it is, right? Lower highs and lower lows. This is a big move here, right? This is a 70% move. If we reclaim this low and trade up to here, it's a 50% move. There's money to be made there. Uranium. What's the best ticker for uranium? Is it UUU? No, it's what's the best ticker? Uranium. Ura. It's probably pretty good. The uranium ETF. Does anyone have any preferences on which uranium chart you want me to look at? Yeah, I figured. Yeah, like I think a lot of people are bullish on this. I mean, does this not just look like an altcoin? Aggressive sell-off, less aggressive, sideways, and now it's beginning its breakout, right? Uni. Oh, you asked me to look at Uniswap. So, I mean, that's all this is, right? Like it's an altcoin. Think of it no differently. How would you trade an altcoin differently? Essentially the same chart here, right? Sell off, sideways, now it's trading up. So depending on what version of this you're trading, it's up to you. Sounds like my wife just got in the Lamborghini. Should we be concerned? But yeah, I understand the bullishness here. We're able to break out here, like legitimately break out. I think this starts to look really fun. Because this is years of accumulation attempting to reverse, right? All right, we got two more, guys. Pumpfun. In the city. See, now that bullshit's stuck in my head. I talked about this last stream, right? Or 2 streams ago. The setup here. Sweep. Breaker. Retest. Sweep. Push. I mean, it looks fine for now. I think zooming out now, what you want to see on Pumpfun, this is the level to watch right here, right? We had a weekly break above these highs. I think you want to see this weekly candle close above this. If we get a weekly candle close above this level, which is 2255 approximately, that looks quite interesting. Because that will be like the first higher high on the weekly in some time, right? That would be a market structure shift. So that's what I'd be watching right there this week, is the close there. Is there a bearish H12, H1 about to trigger on Bitcoin? No. Where's the H12 SFP? There's an H4 SFP, not even. Well, I guess. You could argue this is what you're looking at. I'm about to sneeze. Excuse me. Like this would be the short I think you're looking at here. Something like this. But this is not an H12 trade. This is a 15-minute trade. Right? Something like that. But there's no H12 SFP. That's an H12 break of the high. No. You could argue it's a 6-hour SFP once it closes. So I see the setup you're looking at, right? But it is not technically an H12 SFP. But that would be kind of the trigger, I think, is, and this doesn't go live, right? Until you get a market structure break below here. Which we don't have. So if the H12 SFP can't be the candle right before, because it's not a swing high. Where's the swing high? The first word of SFP is swing failure pattern. It's swing. Where is the swing high? This is not a swing high. This is a swing low. 1, 2, 3 candles make a swing. We trade below it. We close above. There's no swing here that you're looking at. Unofficial kick, vice president. Well, get me a fucking, get me a kick streaming deal. I need 500K a month. Treat me like I'm Aiden Ross. VVV. Are we talking about, I imagine you're talking about the crypto. You're probably not talking about Valvoline. Is it good to play Monday's range? I mean, sure. Is Monday's range giving you a setup? I haven't traded Monday's range in a while. Yeah, I mean, this would be a much more interesting trade. Okay, so you see I drew this little 15-minute setup here. Well, there'd be good confluence for this 15-minute setup if we also broke back within Monday's range. But I don't see anything yet. No market structure break yet. The only thing that's... And the SFP is not even locked in. There's still 19 minutes until this SFP locks in. Okay, Venice, right? VVV. I mean, I like Vuhiri's, or however you say his last name. So I'm inclined to think that, a private, AI model that's not inculcated with, the bullshit is probably a good thing. But I don't understand. I know they have like a dual token equity type of system. I got no idea how it works, to be quite frank. But nice little run up here. I'd want to see it now put in like, a base and then continue. All right, we'll come back, guys, and we're gonna check the charts again in a little bit here. We'll come back in like 15 minutes once the market closes and see if this SFP is locked in, for example. See if that changes anything. But so far, nothing really to change. Ooh, I can start a goal. Wow, what the hell is this? Goal for super chats. Can we get one single super chat? You gay. Am I gonna get banned for this? Goal created. See goal. If we get one super chat, it means you're not gay. Sick. So glad I turned on monetization. And some coins not really done anything. I know a lot of people have been tracking this. Not really much going on. I don't know if he's still airdropping or how that all works, to be honest with you. But basically, this thing's been going sideways for the last 2 weeks. So it had its big run up. Now it's just kind of going sideways. This wallet has gone down quite a bit. So I don't know. Is this also Ansem here? Because I believe, if I'm not mistaken, it was like 58% of the supply was in one wallet. Now it looks like 10% of the supply is in a different wallet. So is this still Ansem's wallet, or is this different? Does anyone know? But yeah, not much going on here in meme coin land, even though everyone's telling you it's over. Really, like, this is kind of where we're at in the trenches. It's still kind of just mass extract, rape and pillage, retail onboarding. So this is a new coin, all the usual suspects talking about this coin as always. And then what happens? The trenches are going to trench. Bundlers used to care about the artwork. I mean, this is just like, it's always the same people tweeting the token and the ticker. And then it's always like a day later at Rugs, and the same people who are like, this is the most bullish coin ever. They're like, what happened? As if they're not the people that profited from this move. Like, usually the people who are like, oh, what happened, are the same people who are the ones in this kind of top P&L, right? And you can sometimes see like some of these P&L amounts. Like, this was a big FOMO app coin, and then the app like stopped working when the coin started selling off. And so many of these guys had the exact same amount of tokens, and their profit numbers are almost identical. It's almost like it's coordinated, almost, but I wouldn't say that. I wouldn't insinuate that people on Twitter, the same people that are always doing it, are taking advantage of you in the trenches and also telling you that the trenches are the best while simultaneously like stealing from you. It's like they got their hand in your pocket, taking your money, and then they're telling you like, hey, don't worry, like, I'm on your team. Let's go, go, go. So it's just kind of funny. I'm not going to insinuate that. If you want to infer it, that's totally up to you. But pretty ugly chart there. As always, guys, if you want to support your boy, make sure you're following all socials here. Order Book on Twitter. Order Book Show on Twitter. We're posting lots of clips from the streams, things like that. So make sure you go give this a check out. I would really appreciate it. We're almost at 5K. Pretty sweet, right? Brand new show, started from nothing. Almost at 5K here. So pretty stoked with that. Make sure you're following the Order Book Show over on Instagram as well. And make sure you're following me over on Instagram, Trader Main over on Instagram. Really helps me out. If you guys want to go follow along on the videos, the whiteboard series has been cooking. We had a new video go out just yesterday talking about laddering into your entries and scaling in on confirmation. This is a really good video. We got lots more of these coming. There's still like 12 more that's going to get released here. I just recorded another new one yesterday. So if you want to support your boy, there's a lot of ways to do it. Watch the videos, share them, follow me on all socials, engage with the stuff. It really, really helps me out. Just getting the views and impressions alone. So yeah, shout out to you guys who've supported me so far, and shout out to Polymarket, who's the sponsor on the show. Obviously, with Polymarket, you can trade on all the sorts of stuff that we talk about in the show, different ways to express your financial opinion, take creative positions using Polymarket. They are the main sponsor on the show. So if you want to support me, support the show, make sure you click those links below the post here on YouTube and click all that stuff. It's the show's not over, Flying Frenchman. This is halftime, baby. We're still going. We're still going. Ooh. Guys, I actually just ordered a Bible. I ordered a Bible, and it just arrived. I'm going to be reading the Bible. I read the Bible a long time ago. I don't remember how old I was. But now that I'm older, I'm gonna read the Bible again and see what learnings I can find within the Bible. I think it's a good time for where I'm at in life, looking to start a family, having some success, lots of big changes. I think no better time to get back into the Bible itself and read it. So I'll let you guys know how that go, but it literally just showed up. I used to rip pages out of the Bible and roll joints. That has to be sacrilegious. I'll pray for you, my friend. Okay, but let's get into some of the stuff that's going on as we wait for the candles to close here. Here we go, guys. We just hit our goal. Thanks to Jeremy, my homeboy, with the super chat of $5. The goal has been achieved. What is the goal? The goal is that you ain't gay. So you guys in the chat, all couple hundred of you watching, should thank Jeremy for making sure that none of you are gay. Citadel Securities sees bull market intact after July tech sell-off. Citadel Scott Rubner called July's volatility a healthy reset, not the end of the bull run, as retail investors dumped semiconductor stocks at 20 times their 2-year average and leveraged ETF assets dropped over 60 billion. The firm noted that excesses cleared out, paving the way for a steadier climb driven by earnings, fundamentals, and buybacks. Traders linked to this Citadel reportedly snapping up. Traders linked this to Citadel reportedly snapping up liquidated AI assets from Leopold Situational Awareness Fund, which shrank from 45 billion to 10 billion amid margin calls. I mean, talk about a grave dancing masterclass. So Ken Griffin and the Citadel boys incite some fear into the market that we might have surprise rate hikes amid massive selling off in AI memory semiconductor stocks. Leopold, the biggest AI bull golden boy, blows up. Citadel buys all of his public equities exposures at the low at a discount. And then they come out and say, hey, that was just a healthy reset. It's not over, up only. Do you not think that they might have a financial reason to be telling you that, hey, don't worry, that pullback that we happened to print on and now bought the piss out of the lows, and it's all going back up? Do you not think that that might have some ulterior motives in that messaging? Like, it's hilarious. Like, they're like, oh, the market actually maybe is going to go down further because of rate hikes. They buy the bottom. They buy Leopold's lick. And now they're telling you that was just a healthy reset. A healthy reset was Leopold losing $35 billion and retail getting fucking nuked. Now it's back to up only. I mean, pretty fucking funny. Pretty fucking funny. But yeah, it's kind of crazy, right? 2 days he could have held out. Ken Griffin, man, the Grim Reaper. The Grim Reaper. Call for an unexpected rate hike a few days ago, causing market panic. Reach out and buy billions from a liquidated hedge fund. No rate hike. The bull market's so back. So like I said in the last stream, guys, the financial crime that occurs, the financial hits that occur in fintech or in TradFi, excuse me, are so much more refined. They're done by professionals. These crypto kids, this is crypto kids scamming. Okay, clear and obvious rugs. This is like chef's kiss. This is peak level financial piracy. Like, this is the big leagues. This is the best poker game, the best competitive video game on the planet, played by the best players in the world. It's really, really good. It's incredible. Yeah. Bull market intact. I mean, this is like Michael Saylor tweeting that Bitcoin's bottomed. Of course he wants it to bottom. He owns a ton of it. Citadel seemingly now owns a ton of these AI stocks, and they're probably going to want them to go higher so they can unload them on the next wave of idiots. Webb says, I know you looked up to Andrew Tate, kind of. What do you think about him being in jail right now? I would say looking up to Andrew Tate is a crazy thing to say. I think I might be the same age or older than Andrew Tate, so I definitely don't look up to him. I like some of the stuff he says about masculinity, about society. I think he's very funny sometimes, but I don't agree with everything he says. I definitely don't look up to him. I think that there's probably some ulterior motives as to why we have like verifiable billionaire elites on the Epstein list doing all sorts of fucked up shit who aren't in jail. Yet this kind of podcast internet guy who says things that they don't like, they're going after him super hard. I don't actually know enough about his case to know whether or not he's guilty or being held, when he shouldn't be. I don't know. If he did the things that he's accused of, he probably should be in jail. But I genuinely don't know. But I do think he's funny. I like some of the stuff he says. Some of the stuff he says I think is insane and I disagree with. It's no different than Elon. I was like, hey, I like Elon for these reasons. And they're like, Elon's the devil. I'm like, okay, well, he's obviously not the devil. I don't agree with everything Elon says, but I think he's a net good for society. I don't know if I would agree with that about Andrew Tate, but Andrew Tate definitely said whatever he wanted, and a lot of people don't like it. It's like Bernie Sanders. Whenever he's talking about billionaires or Elizabeth Warren, notice how they never talk about Bill Gates and George Soros. They only talk about Trump and Elon and all of the billionaires who aren't in line with their political ideology. That's kind of how I feel about the Tate thing as well. Like, he's obviously right of center. And so, in a place like the UK that is clearly left of center, where he's commenting on mass migration, the rape gang inquiries, and all this sort of stuff that's going on in Europe and the UK, kind of makes sense that they're like, well, this guy, we don't control him. I don't want him to talk. Let's get rid of him. Yeah, we just kind of covered this. Be Citadel. Call for an unexpected rate hike. Cause market panic. Buy the piss out of the lows at a discount of Leopold. No rate hike. And the bull market is still fully intact. Like I said, chef's kiss. It's hard to do better than the goats, right? Like, at the end of the day, Ken Griffin's been around 30, 40 years in this business, man. What Leopold is learning is that you can't teach experience. Breaking, the S&P surges above 7,700 for the first time in history. This pushes the total market cap of the S&P above 70 trillion for the first time ever. How high is this going to go? To me, this is on like Donkey Kong. Like I said, guys, like I like I like these all-time high breakout setups. Look at the last few times we broke all-time high. Okay. So this is going all the way back to 2022. When we finally got above that all-time high, rip. Big correction, finally got above all-time high, rip. Correction, finally got above all-time high, rip. I don't see why this is going to be different. Unless something crazy happens, I'm going to assume that this thing is ready to put in another relatively aggressive rally with little to no pullbacks. So if you are bullish, you know, I think like I said earlier in the stream, any sort of pullback here, I think is probably a long with your stop below there. This to me seems like a pretty good bet. Obviously, there's no such thing as free money, but it's only August 4th. What will S&P hit in August? This market will resolve, yes, if at any point during August we trade above 8,000. That's 30% juice. So on a $1,000 bet, you can win $300. And all that this has to do is trade 3% higher within the next 27 days. I think based on this breakout, assuming nothing crazy happens, 8,000 this month is pretty, I'm pretty confident in that. This might be a very interesting bet here, to be honest with you. Even 70, like they need, honestly, like they need higher numbers on here. They need higher numbers on here. I would bet on fucking like 81, 8,200 possibly within this month. Now, the difference here between taking just an outright directional trade here. So like you're going to say, okay, I think this goes from here to here, and I think this is going to go to here, let's say. That's your trade idea. Well, this is going to pay you 2 to 1. But this trade, which is just to here, right, pays only 1 to 1. This pays 1 point. Like this pays 1.3 to 1. I don't know, man. Like the main difference is the time value, right? And we're very early in the month. So that's where I think this can kind of get interesting, because on this trade, like your invalidation's clear. Here you have a premium based on time. So as we get later in the month, if we start trading higher, even if we don't trade to 8,000, but we're at 7,900 and a week goes by, there's going to be juice here that you can trade and close before we even get to the end of the month. Do I think this may be a bull trap? It could be, but the beautiful thing about the stock market is, is you can just trade it so clean, dude. Like, okay, if this is a bull trap, we break and close back below all-time high. Right? Like where was the last example of this? Right here. Held, ripped. Same thing here. Got back below, ripped, retest, went. Like this stuff trades really clean. Same thing with like Nvidia. This was a bull trap. How do we know? It got above, failed to hold, back below. Okay, it's not ready yet. So like you have kind of single line analysis. I think you long any sort of pullback. If we break and close back below here and hold, you're wrong. Simple as that. But I generally, equities have played pretty clean with these all-time high breakouts. Right? Generally, all-time high breakouts have been a buy. All right, the daily candles closed on Bitcoin. So the SFP is now locked in. So you have a 6-hour SFP. You have a 4-hour SFP. You have an hourly SFP at the high. You've now got the market structure break. So you could either market short right now, right? Or you could put a limit order here. Or you could put a limit order here. It's up to you really how you want to enter. But in theory, the H4 M15 setup is active. Whether or not it works out, I don't know. And how you want to enter, right? Do you market short on the market structure break? Well, then you enter right now. Do you want to enter on the market structure break level, or do you want to enter at the breaker? But that's the setup. So I don't know. This might be an interesting bet. I might put this on after stream, because I think 8,000 this month is not a crazy take. It's not a crazy take at all. $1,000 wins you 1,300. Not a crazy take. So back to like Doomer Main, even though I'm just talking about the market breaking out to new all-time highs and looking good for higher prices, I still don't believe this is early cycle stuff, okay? I'm in tears. I finally hit my dream goal. In April, I went all in on Amazon, AMD, Nvidia, and the S&P 500. I had no one but my wife when I was working graveyard shifts studying to become a CPA. I will now retire her. Thank you so much for all the support over the years. I will share more. So this guy's up $1.2 million in the past year. He's up 68% on his account. Now, I don't even think this is actually as much of a like crazy result, because this is over a year, but effectively, like, this guy bought the tariff lows is what he's saying, right? He bought in April of 2025. That's the tariff lows, right? That's right here. Yeah, so he bought the tariff lows and he caught this entire move. The S&P alone is up 61% and he's up 68%. So I don't know what his exact entries are, but he went all in into Amazon, AMD, Nvidia, and the S&P in April. So he bought near the lows. I mean, the S&P is up 60%. He barely outperformed the S&P. But good for him. I mean, where does a guy who's studying to be a CPA get $1 million? I don't know. But I think this is just, again, another piece of data in that we're getting long in the tooth here when there's people making, $1 million just being long the S&P 500 over the last 14 months. Like, I just don't think this is early cycle stuff. AMD in April of 2025. See, I don't really understand this even. Like, what was his portfolio makeup? AMD, he rode from 77 to 504. Nvidia from 88 to 225. S&P from 485 to 739. Amazon from 162 to 270. He sells options on the S&P, buys leaps, Mag 7 Fibonacci dip buyer. I mean, I don't know. I can't shit on some guy who's up $1 million, right? By any means. But, like, is this guy really good at what he did? Or is there a chance that he is a bull in a bull run? The stuff that he's in, AMD is up 500% in that time period. The S&P alone is up 60% in that time period. So this reminds me of crypto. When everybody appears to be a genius, and it's like, were you really smart, or are you just a bull in a bull market? I would have to watch some of this guy's stuff to get a better understanding of what he's saying. But, like, this type of language is like, 100K option strategy that generates weekly income, 175 winners with 0 losers. How I made $206,000 trading options. Like, this is extremely risky stuff, guys, by the way. Trading options is extremely complicated if you have no idea what you're doing. Copy my future options trading strategy. So is this a guy who knows what he's doing, or is this a guy who's just done very well and now he's profiting and using the fact that the entire market has gone up? Like, again, my brother, who I love to bring up, is not a trader. He's up more than this guy. So my brother's up more than this guy. And the dollar, like, you know what I mean? So, and my brother isn't actively trading options and selling calls and puts and shit. My brother just bought into AMD and Micron and Sandisk and shit and just did nothing. So again, to me, not like early cycle signs, but hey, good for you. $2 million is a lot of money. Don't blow it. Don't confuse yourself with the fact that you've been part of the greatest bull market in recent memory with the fact that maybe you don't actually know how to trade. I don't know. Situational awareness has no limits on leverage or position sizes, prospectus shows. We're going to talk about that in a few minutes here when we get to another item. This is another example, right? What a difference a week makes. Down 282,000 in a week, down under 1 million, now up over 1 million, up 52%. Just based on these two images, you can tell this guy's likely all in these stocks. Okay, so how many more people are like him that didn't sell, right? Didn't sell on the pullback, and now we're bouncing a bit, and they're like, we're so back. I don't know. Curious to see. But again, this is just not, these are regular people, turned 50K into 1 million in 1 year with no options. Famous on Wall Street bets with 23 million views. Your mom's favorite trader. Like, again, to me personally, not early stuff. My sleep's terrible. Looking to get off some margin in the next couple weeks and fix it. Is everyone going to get away with it? Keep in mind, he held. A lot of people got absolutely annihilated and lost and closed, as you guys remember from Robinhood Social, right? But just not early cycle vibes for me. More like end of days, one more leg kind of vibes. That's just me personally. So this is a very important post here. Now we're going to listen to Trump here because he's just so fucking funny.
With Japan, we're
at this time
to support who?
to support the Japanese currency.
Because we have a good relationship with Japan. We're very strong, very, very strong financially. And they are, they have a weakening yen, and they wanted a little bit of help. And we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Mr. President,
They were not good.
What is the U.S. getting out of that arrangement?
How can you not find this guy funny? Like, whatever you think about Trump, bro, like, just to throw in the Pearl Harbor joke is just so fucking funny. So the report is asking, why is the U.S. intervening to support the Japanese yen? The answer is a mathematics questions here. Japan owns $1 trillion in U.S. debt, according to the U.S. Treasury. So if Japan needs to defend its currency without the U.S. buying yen, it would almost certainly sell U.S. debt. That would lead to a rise in interest rates. This goes back to the yen carry trade conversation that we've had over the past few videos here, as we've seen the yen basically been at its weakest point in like 30 years. Like, this is the last time the yen was this weak, because it's the denominator here, right? Was like way back in the 90s, right? Way back in the 90s, it was this week, okay? So what does this all mean? Well, the yen carry trade, quite simply, right? Borrow yen cheaply at low rates, convert to dollars, invest in high-paying U.S. assets like treasuries, pocket the difference. It works best when the yen is weak. If the yen suddenly strengthens, which would be demonstrable in something like this, the yen rolling over, right? Investors must sell those U.S. assets to repay the yen loans. That selling can push U.S. interest rates higher. Coupled with that, if the BOJ wants to support the yen itself, it can sell U.S. debt, which also would push U.S. interest rates higher. So a collapsing yen risks the exact kind of selling. US helping support the yen aims to keep the rates from spiking and the yen carry trade from unwinding. So a lot of eyes are on Japan right now because they could start selling US debt, right? They've been spending billions trying to stop the yen from falling. 160 billion this year. 53 billion last Thursday, 34 billion last Friday, and every time the yen strengthens for a few days, then it goes right back down. They can't fix this by spending reserves. It can be only fixed by raising rates. So this thing compounds, right? If they're unable to spend, even with the US help, to strengthen the yen, okay, they're going to have to raise interest rates. And if they raise interest rates, that brings in this entire grok explanation here, right? That if the yen, that there could be selling of these US debt, which will cause interest rates in America to increase. So that's why the US is helping, because they don't want interest rates to increase, because if the interest rates increase in Japan, this yen carry trade has to get unwound, because no longer can you borrow the yen cheaply, right? Once interest rates go up, you're going to have to pay back those yen loans, which are at higher rates, okay? So this is why this is important. Look at that face, perfect freeze frame there. But that's what everyone's watching when it comes to the yen here, is whether or not Japan's going to have to raise interest rates or sell US debt to help stop this, which could confound with additional yen carry trade unwind, blah, blah, blah. So this goes back to the Fed decision in December. Right now, no change is at 50% here. If we go over to the CME Group website, okay, these are the current probabilities. So the current target rate is here. So now no change is 43. When we looked at this on Thursday, this was over 60. So we talked about potentially there being some alpha here, but with the delta between what's showing on Polymarket and what's showing on CME. If you guys remember, when it's over 60% probability, it's almost a lock. This is now getting closer to 60% that there will be a rate hike. Whereas here, a rate hike's only at 49%. So you're getting 1,000 pays almost $2,000 here. And this is pretty damn near close to 60. Now, we are still 40 days away. A lot can happen between now and then, but these are the websites that you want to be watching. You want to be watching this on Polymarket. Generally, there's an opportunity, like we showed off in that one trade the day before, where, you know, if this thing's over 60 and Polymarket's got better or worse odds, there might be an opportunity for a pretty solid risk-adjusted trade here. That 30% kind of juice we were able to get last time, maybe that replays this month. This is moved, right? This was over 60% on Thursday. Now this is switched. This yen discussion is part of this. So that's going to be something to watch. We're going to be tracking this market very closely over the coming weeks. We kind of talked about this already, but welcome to crypto. I hope you enjoy being onboarded. Retail's back. Meme coins are the future. This could be you. You could be one of these people getting sexually assaulted on the chart. It could be you. You just have to onboard to Solana. I think this is a really good video to watch. I'm actually going to play some of this clip, and then I'm going to talk about it, because the next Whiteboard Series video that I have coming out on Monday is exactly about this. It's about risk management. And someone in the chat just said that situational awareness had no limits on leverage or position sizes. Flood was on Thread Guy, and he talked about kind of modern portfolio theory, stating that you should only have about 5% of the average daily volume of any stock as your position size. So if a stock does 10 billion in average daily volume, your position size shouldn't be more than 500 million, right? 5%. Ken Griffin and Citadel and Martin Shkreli talks about this in this TPBN interview, which was also really good and worth watching. I watched the whole thing. Is that you probably don't realize that like all of these hedge funds are using leverage, but they have extremely tight risk controls that they developed over years where they never will put themselves, at least the good ones, in a position to get liquidated. They say leverage kills, but leverage only really kills if you have poor risk management. So your position size is too big, or you don't have the proper risk parameters in place to de-risk and de-leverage before you can get blown up. And from the sounds of it, because let's be honest, Leopold is probably a better single name value investor, maybe even venture capitalist than maybe he is hedge fund manager, because he didn't seem to have any of these risk controls in place. They're 4x levered. 25% move when you're 4x levered wipes you out. You're getting margin called. They were too concentrated. And what we discovered is, his position sizing, his net asset value, because he's levered up, and his positions on some of these companies wasn't 5% of the average daily volume. He was like long 10% of the market cap of some of this stuff. So he really painted himself into a corner. And I think the market knew that and, was able to squeeze him out at the bottom on a pullback. And from the sounds of it, he had no risk management in place to prevent that from happening. There's nothing wrong with using leverage if you use good risk management and you size accordingly. So this is a really good clip from Martin Shkreli, but basically what he's saying is every trader out there makes the same mistake over and over again. Their position size is 2 to 10 times more than it should be. He talks about the Kelly Criterion simulator you can use to test this out. And most people don't have an edge at all. But even if they do have an edge, they're oversizing. And if you run the simulator, even with an edge, if you're oversizing, you're going to bust. So even with a 60-40 edge, meaning you win 60% of your trades, you're going to go bust just from overbetting. So if you have a 60-40 edge in the stock market, like nobody has that edge, you're going to go bust. And people are sizing as if they have that real edge. Even with a real edge, if you're sized incorrectly, you're going to blow up. So this is a really good interview. This is worth watching, the whole thing, in my opinion. Here's how you determine position size, guys. You're going to take the amount of money that you want to risk. So let's say you want to risk 2% of your account. You're going to then multiply that by your account size. Okay, and you're going to divide this by your entry minus your stop. So the distance from your entry to your stop. So let's assume you have 100,000. Notice how leverage is not even part of this calculation. Let's assume you have a $100,000 account. 2% times 100,000 is 2,000. Okay. Now let's assume that your entry on Bitcoin is at 100 grand. And your stop loss is at 98,000. Okay, well, that's $2,000. That means for this trade that you're going to take, where your entry's at 100K and your stop's at 98K, 2,000 divided 2,000 equals 1. Your position size should be 1 Bitcoin. Most people taking a trade where, their stop's $2,000 away, they're going to go ahead and long 5 Bitcoin or 10 Bitcoin, and they're going to use leverage to achieve that. And that's what really fucks them up. It doesn't matter if you have a 30, 40, 50% hit rate. If you're over betting, risking way bigger than you should, you're going to get fucking smoked. You're going to get fucking smoked over a long enough period of time. And what Shkreli explains here is, if you run it through the simulator, it doesn't matter. You eventually zero. Over betting, over leveraging. This is how you actually calculate your position size. It's not sexy. It's not fun. And if you start doing it this way, what this means is if you're entering at 100K and then price goes to 98K, you're only long 1 Bitcoin, you're only going to lose 2 grand. That's how much you wanted to lose before you entered the trade. The problem is people get excited, they use leverage, they oversize, and then the trade goes down, right? Now you're down 4,000, 5,000. Now you're down 5% of your account. That's where people really fuck up. They have no idea when it comes to position sizing. This is how you calculate it. This works on any asset, okay? Let's say you want to risk that same $2,000, but you're trading ETH, and your entry on ETH is at $3,000, and your stop loss is at $2,500, okay? So what does that equal? Well, you have 500 on the bottom there. How many times does 500 go into 2,000? Right? 4. Your position size should be 4 Ethereum. Most people don't want to do a 4 ETH long. It doesn't sound like enough. But if you only want to lose $2,000 and your stop is going to be $500 away on ETH, this is all you can get away with position size. I know this sounds like a tiny position, but your stop is really far away here. If your stop was instead at 2,900 or 2,950, let's say, now your stop's only $50 away. So you get rid of one of these zeros, all of a sudden, right, you got 40 ETH. But this is how you actually figure out your position size. And Shkreli is correct. If you oversize, you're going to blow up. And most people do not have an edge at all, or nearly as good of an edge as they think. And even with a really good edge, you blow up if you overbet. So this is a great post. This was a really good interview, really good podcast. Traders debate prop firms, courses, and personal track records. So Isaac from Iman Trading defended prop firms as low-stress options after years of his own independent trading, offering a free guide on using them wisely. Timothy Sykes highlighted in his free book on past losses and shifts to conservative teaching after running Cilantro Fund Partners, which saw big early wins before closing in 2007. Lance Brightstein urged respectful talk amid the exchange, reflecting tension between self-made records, educational products, and funded trading paths that cut personal risk for some. Yeah, this has been a bit of drama here. I don't know how the prop firm aspect got into it, but basically Chris Camillo was down mid 8 figures, 40% on the month. He was getting margin calls because he longed Amazon into earnings. And then he ended up having his single best trading day of his career. Amazon beat earnings and he made a shit ton of money. He ended up being correct. And it started off this big kind of conversation around risk management. You know, are you risking too much? How can you ever be down 40% of your account? The thing is we have no idea, I agree with Lance here, if he took on too much risk because we don't actually know his actual position sizing. We don't know the full financial picture. He might have been down 40% on that account, but that account might just be one of his many trading accounts that he used to trade. The way that I do risk management is exactly how I explained it to you here. Really, I have 2 ways I do it, okay? On any sort of like spot bet, or just single name stock or anything like that, I'm investing in an amount that I'm willing to lose. Like when I'm investing in Bitcoin, I invest in Bitcoin amounts that I'm willing to lose. I have areas where I think I might be wrong, but on single trades, I'm doing this. I know exactly how much I stand to lose before I enter the trade. Now, being down 40% might be like, okay, well, how can you allow yourself to be down 40%? The thing is Chris knows what he's doing. He's been doing this a very long time. I'm with Lance. I don't ever want to be in a position where I can't sleep anymore. Chris is still, I think, much more, ripping it at this point. And ideally, I assume he understood the downside and accepted it beforehand, right? This is really the essence of risk management right here. You need to understand what the worst case scenario is, not how much you might make, but what you stand to lose. And you need to accept that before and make sure that fits within your risk framework. And if it does, go for it. This is how you determine position size, okay? I'm prepared to lose $2,000 on this trade if I'm wrong. You accept it before you enter the trade. And if the trade doesn't go your way, you're prepared to lose that $2,000. So I would assume that Chris knew exactly how much he was standing to lose, and he was comfortable with that amount. now there's this little back and forth because Tim has basically made his career selling courses on how to trade penny stocks. He ran a fund that blew up. He's trying to say he's being irresponsible. He got lucky. It's Russian roulette. He's kind of clapping back at him. I don't know, man. Bold choice of you to lecture me on my own catastrophic risk managing my own money over 18 years, giving your own publicly documented hedge fund experience managing other people's. I'd encourage everyone reading this to spend 1 minute researching Cilantro Fund Partners. And he's basically saying, I lost my money. I lost a bunch of money with poor risk management. And then I started teaching people. I mean, Tim Sykes is like the OG course seller. You can literally see him shilling his own book in the replies. It's pretty fucking funny. I've got some friends who like Tim. I'm much more of a Chris fan. I think Chris is the real one. He's real chat. He's been managing his own money for a very long time. He's done very, very well. Verified profits in the tens of millions of dollars. So back to what Lance says here, I think this is the most important paragraph when it comes to risk management. If Chris understood the downside, accepted it beforehand, and the position fits his own risk framework, then I don't have a problem with the decision, even though I wouldn't have made it myself. It's exactly how I feel. If you understand the risks, you're willing to accept the risks, I think you're, more than welcome to take the trade. But understand the downside before. I think that's the biggest mistake people make is they always assume the trade is going to work. So they think about how much they're going to make. They never think about what's going to happen if they don't have the trade correct. You need to know exactly how much you stand to lose before you enter the trade. If you're comfortable with that number, fucking run it, bro. So little old man fintech FinTwit drama. Pretty funny. But yeah, Tim Sykes is like the OG course seller. I think I got to wrap here, guys. I totally forgot I got dinner in 30 minutes, and it's a 30-minute drive away. So we'll get to some of this other stuff in the future. Flood saying, one more lick. Crypto trading activities declining. Who the fuck wants to trade crypto when you can trade stocks and AI stocks and memory stocks and semiconductor stocks? What's up, Dub? Welcome after 3 years. But yeah, daily volume down massively since December, down 50%. Obviously, a large part of this is look at price. Also down 50%, but not surprising at all. Real quick here, just want to shout out Polymarket sponsors of the stream. You can now live stream and live trade tennis on the Polymarket app. So they're the official prediction market partner of the ATP. So you can actually watch the game while trading the game as well. Who's going to win, all the stuff that happens during the game, the press conference, and you can watch it on the app for free, right? So for free. So if you have the Polymarket app, you can now watch ATP tennis on it. Pretty fucking cool. They're becoming kind of the everything app, which is what we love to see. We're big fans of Polymarket here. I was going to talk about the World Series of Poker main event. I don't know any of these players. Does anyone have any alpha on any of these players? Who should I be betting on to win the World Series of Poker? Because I love to watch live poker, but I don't know any of these guys. But I got to go to dinner. It's date night with my wife. And I literally got to get dressed and leave right now.